In this example, I'm going to show you how the closing process works. As you know, we go through the closing process after all accounts have been adjusted and financial statements have been prepared, and we want to get ready for the next accounting period. So we have to go through a 4-step closing process where we first close out our revenue accounts, then we close out expense accounts, then we close out the temporary income summary account, and finally we close out the dividend account. So the starting point here that we have is the adjusted trial balance, which is the latest trial balance with all the latest balances in the different accounts. And so we are going to pick out revenues, we're going to pick out expenses, and we're going to pick out dividends from here to close out. And so to show you what exactly happens in these accounts, I have transferred the balances of the revenue accounts, the expense accounts, and the dividend account to these T accounts here so that I can demonstrate to you what happens when we close out the account. I also have T accounts for income summary and retained earnings because those accounts will also be used during the closing process. So let's get started. The first account to close out is the revenue account, and I have just one revenue account to close out, fees earned. And this has a credit balance, and my goal is to get that balance to zero. So to close out that account, I would need to debit fees earned, and I close out the revenue account to income summary, so I would credit the income summary account. So my closing entry to close out the revenue account would be a debit to fees earned for $25,000 and a credit to income summary for $25,000. If I posted this entry, I would indeed accomplish what I wanted to, which is get the balance of the fees earned account to zero, and then I would be transferring $25,000 to the income summary account as well. In the next step, I have to close out my expense accounts, and I have 3 expense accounts to close out, and they have debit balances. And to close out these accounts with debit balances, my goal is to get them to have a zero balance, and so to accomplish that, I would need to credit these expense accounts and transfer their balance to the income summary account by debiting the income summary account. So the closing journal entry would be a debit to income summary for the total amount of all the expense accounts, but I would individually close out each expense account. So I would credit wages expense for 7, utilities expense for 6, depreciation expense for 2, and the total of all this comes to $15,000, and I would debit income summary for that. So once I post this entry, I would indeed accomplish what I wanted to, and that is to get my expense accounts to zero. In the third step, I close out the income summary account. Presently, my income summary account has a balance of $10,000 credit, which essentially represents net income. So I have revenues of 25 and I have expenses of 15, and the difference between the two is my net income essentially of $10,000. And so income summary has a credit balance of $10,000 that represents a net income that I need to close out, which means to close out that credit balance in income summary, I would need to debit income summary, and I close out income summary to retained earnings, so I would credit retained earnings. So my closing journal entry to close out the income summary account would be a debit to income summary for 10 and a credit to retained earnings for $10,000. So once I post this entry as a debit to income summary and as a credit to retained earnings, I would have no balance left in income summary. My income summary account would be closed out. Finally, I have to close out the dividend account, and the dividend account has a debit balance, and my goal is to get that to zero. And so I would need to credit dividends, and I close out the dividend account to retained earnings, so I would need to debit the retained earnings account for 1,000. And so my closing journal entry to close out the dividend account would be a debit to retained earnings for 1,000 and a credit to dividends for $1,000. And so when I post that entry, I would indeed accomplish what I wanted to do, which was get the balance of the dividend account to 0. I have completed now the 4-step closing process where I have closed out all the temporary accounts. And so the only accounts that remain now are the permanent accounts, which are assets, liabilities, common stock, and retained earnings. So to make sure that I have gone through the closing process correctly, I prepare one last trial balance, which is called the post-closing trial balance. In the post-closing trial balance, I will have just the permanent accounts. And so right here, I have prepared the post-closing trial balance and essentially transferred the balances of all the accounts that are permanent. Now, none of the accounts other than retained earnings has changed here. So all the asset accounts and liability accounts and the common stock account remained as they are. The only permanent account that really changed is retained earnings, and now it has a new balance, and the balance of retained earnings now is a credit of 12,000, and so that's what I need to record right here as the balance of retained earnings. That's the only account that changes as a result of the closing process. And so that essentially represented the net income that I transferred and the dividend that I took away from retained earnings that gave me the new balance of $12,000. And so now my post-closing trial balance is complete. The two columns, the debit and the credit, equal out, which means I've gone through my closing process correctly, and I am ready to start the next accounting period. So closing is a very simple process. Once you understand how it works, it's very easy to prepare closing journal entries. One thing you got to remember is that on the test, you will not be given the adjusted trial balance, which is in a nice, neat order. You will be given accounts which are all mixed in with a balance without really telling you whether it is a debit balance or it's a credit balance. All you will be told is that the accounts have a normal balance. So you would have to identify revenues, identify expenses, identify the dividend account, and close out the accounts just based on your knowledge of, okay, these are revenue accounts, these are expense accounts, and this is the dividend account, and know what their normal balances are to be able to close them out. So it will not be given to you in this nice, neat order that you saw. The accounts will just be mixed in and will not be in any particular order, and you will just have a balance given beside it.